We have here the Global Chief Economist of CBRE. Ben is the head of Americas for Brookfield, but also oversees the office activities. Manoj Menda is the supervisory board of RMZ, one of the largest organizations for real estate and infrastructure in India, with a few billions under of properties there. Very active, always here in the States, right, Manoj? Trying to get what's the future of real estate, and it's very good to have you with us as well. So the idea here is for us to have a quick talk about emerging markets, not just about Latin America, because we believe that the trend for the future is not only to do with Mexico or Brazil, but India is a very important player in the new in the world that's coming after China, as Richard. Perfect. Manoj, thank you very much for being with us. I want to get your perspective as well about India, but you're always here in New York, in the West Coast, in Europe. When you talk to the foreign investors, even though I have been to India, I don't know, 3-4 times in like six months, and I find it amazing how the market is developing and booming, and I keep talking about India. But I don't see the volume of international investors deploying capital there. A lot of the capital that's fueling the industry in India are domestic capital, plus the Brookfield guys, the Blackstone has been there for a long time, Adia, GIC, but there are not many new players coming to their market. A few Japanese funds are looking, but can I ask you about the current status of the Indian market, but also how that momentum is inserted in the global macroeconomy?
Thank you, Gustavo. First off, I want to pick up from what my colleagues on the panel said. Optimism. I think Ben said optimism. That would be my opening word for India. And Richard said India is taking away from China. So if I put the two together, there's optimism and India taking away from China as my probably opening remarks for how we see India panning out. India is an economy which is likely to be the third largest economy in the next 5 or 6 years. So that's an important consideration to keep in mind, and the pace at which the economy is growing today. We're growing at a little over 6% year on year with inflation under check. So those are great economic factors that influence the growth of our country. So these are important economic factors. But if I look at it from a real estate perspective, we speak about net absorption in the Americas being negative, and we just saw their statistics for LATAM. But India's office net absorption is about 50 to 60 million square feet per year. So that's a very, very important consideration. And we have seen this year on year with growth happening, right? So if I look back 10 years ago, we were probably doing about 35 million square feet a year in India. Today, it's about 50 to 60, and it's likely to double to about 125 million square feet in the years ahead. So that's a very important factor as far as office goes. But if you look at all the other asset classes that exist in India today, residential in India, 70% of the real estate developers in India focus on luxury housing. The pricing of luxury housing in India is at its peak. We've never seen luxury housing peak at these prices, and with absorption, which is very, very favorable. So another asset class that's been doing phenomenally well across the country and across the spectrum of pricing. You could be in mid-market pricing, you could be in affordable housing, you could be in luxury housing. All three are doing phenomenally well.
Lost the audio. 1 second, Manoj. Can you check again? Can you say something again, Manoj?
Yes. Can you hear me now?
Now back. Yes. Great. Can you hear me now?
Right. And if you look at the other important factors, I mean, India is a country with a population of close to 1.5 to 1.5 billion people. And our gateway cities have populations of 20 million and above, right? The other emerging factor that's coming out in India is what we call tier 2 cities. So there are a bunch of 10 or 12 cities in India, what we could consider as tier 2 cities, which are actually also beginning to see a lot of traction in terms of real estate. So it may not be as much in office, but you'd see a lot more in terms of residential. You'll see it in retail. You'll see it in hospitality. A couple of other asset classes that have seen great progress in India. Retail continues to be a thriving asset class in India. We speak about some of the other thematic asset classes that have now emerged in the last couple of years. Data centers is another asset class that, it's still very small. It's only, 1 megawatt that India has today, but I think that's people are coming in and investing in data centers, as well as in healthcare, in education, in transportation, as far as real assets is concerned. But to your point, Gustavo, as to why is India still attracting only 4 billion of the 200 billion that we saw being invested in real estate? Why is it that, we don't have more capital being invested in India? One is we have a very strong domestic capital market, right? So you have access to currency in the capital markets in India today. So most of the developers would prefer to list in the Indian markets, which are actually very favorable, that give you some great multiples on your earnings. And I think their access to currency is from domestic capital markets. So I think the dependencies on foreign direct investment, which India has been seeing over the last 10 or 15 years since the market opened up, is only a small sliver of what the global markets are today. And will that change? I think, yes, the 4 billion that we see coming into India is likely to double or even go up to 20 billion is per my estimates. And this would only happen with the evolution of the industry. So when there's more liquidity in the market and there are more exit opportunities that happen, the REIT markets are in India for the last 3 or 4 years. And I think once these mature and develop, then you'd find a lot more capital flows coming into India. So in summary, a great optimism. It's one of the greatest economies today as we see it. It's growing at 6%, and every asset class in India is doing well. There is inflation. Inflation still, our retail inflation is under check. It's a little under 4%, but I think there's a great amount of optimism that we're going to see in India.
There's one thing that we are talking here, that's geopolitical tensions and so on. And when it comes to that, India has been positioned itself in a very neutral position, buying oil from Russia, welcoming investors from the GCC region, from the US, from Europe, from China, even. So it doesn't feel like this is directly impacting India. It's actually, I wouldn't say benefiting, but there is lighter in terms of impact. How do you perceive that? And do you have anything in mind that would keep you up at night at the moment in terms of real estate market or macroeconomy?
Gustavo, I think what we're seeing around the world, in many which ways, India is insulated because it's a very inclusive economy, right? But there has been a great benefit in the supply chain shift from China to India. So the China plus one strategy that we speak about, where people are shifting supply chains and looking at other emerging markets, and India has greatly benefited from that one shift. But what's very critical for India, and I speak of it as an emerging market, is there's a lot of urbanization that's taking place. And I think if we look at today, the urban infrastructure and social infrastructure in emerging markets need to keep pace with real estate development, because there's no point in having cities that are having great real estate developers and assets, and you don't have the required urban infrastructure and social infrastructure to keep pace with it. So I think one of the aspects that does keep me awake at night is, will emerging markets be able to strike that balance that we see between urban development as well as urban infrastructure? So I think that's an area where China did extremely well and invested at very early in its urban infrastructure, which actually fueled the real estate market. Whereas in India, it's the other way around. So I think that's one aspect you look at India that they would have to necessarily focus on, or any emerging market, in keeping that balance. Thank you.
Manoj, I want to ask you about asset classes, but I also want to ask you, not just as a leader in India with a big empire there, But as a global investor, if you had to pick a place to deploy capital now, what would that country be? Would that be India? Or if you had to choose a second option from what you see in the world? And also, where are the best opportunities? Is it asset related? We had a conversation in Switzerland in January, and you brought a different view that's not asset related. And I would like to talk about real assets as well, the way you are describing. If you could elaborate here for the audience, would be very interesting.
Lovely. So I think, I just want to, complete a comment that Ben made about work from home, even though that was not your question for me for India. But for us, return to office is about 85%. So that's an important factor that people want to come back to work, right? And it's not something that people are shying away from, because culturally, in a market like India, people are used to coming to the office and can't work from home because they have smaller homes, they live in joint families, which I think might also be the case in LATAM, where people actually would prefer to come back to work. But that's just a side comment. But to your bigger question, if you give us an opportunity to invest today, I'll have to say India. There's no reason for us to shy away from India. And the reason I say that is for a couple of different reasons, right? We're agnostic to which asset class we invest in India. So we term our business today more as real assets and not just real estate, because we have seen that there's a lot of juxtaposition between infrastructure and real estate. So today, what would be called as an infrastructure asset earlier, maybe airports, but could also be looked at as a real estate asset today, because it has an aeronautical side and a non-aeronautical side. But fundamentally, the success of an airport is real estate. So the way we've looked at our business today is we looked at a couple of different asset classes that are there in our country today, and we identified about 10 or 12 of them that one can potentially put capital behind. And, based on risk-adjusted returns, the IRRs today in India at the low end would probably be, 20% IRR for something like warehouses, industrial and logistics. And if you happen to be in condominiums and being residential for sale, you're probably sitting at about 40 to 45% IRR. So the IRR game is, or the equity multiples that you see in investing in India is very, very attractive. Like I said, on the low end, maybe a 2x equity multiple. And if you do well in certain projects, you probably end up with a 6x equity multiple. Now, I don't know of too many markets, Gustavo, around the world where you have these opportunities, right? Where you can take a choice and balance your portfolio and say, if I had $100 to invest, how would we allocate that across different asset classes? Typically, we would not put anywhere beyond 20, 25%, not even 20% into a specific asset class. And I think that's just the way we do our allocation of capital. But I think the opportunities that India brings about is far greater for us to be distracted and putting capital into other markets, because it's a growing economy, right? It's all opportunistic development. There's very little value add and conversions that Ben speaks about that you see happening in the Americas that are there in India today. Vacancies are less than 10%. If you came into India as the global capability center, we have 1,600 GCCs in India today. If you came in and said, I want 100,000 square feet of office space tomorrow, it's not available. Today, when companies come to us and give us RFPs, and RFPs typically can go anywhere from 100,000 to maybe 2 million square feet. We do a lot of 2 million square feet RFPs. And the lead time on that is 3 to 4 years. So it gives you a sense on how the market is today. The absorption is very high. The supply is relatively low, but everything that's being put out there is meeting all the norms of sustainability. So when we speak about, a sustainable development, we speak about social collaboration, we talk about social spaces, and what we call it as social experiences are all embedded in every one of the assets that we developed and that we've been doing for the last 20 years in India. So The advantage that India faces as an emerging market is that it has learned from the other markets and very quickly adapted itself to bringing in all these practices. So you walk into an office in India where you're paying as low as maybe $25 per square foot per annum rent, which is marginal. It's very, very marginal. But the amenities that you get there or the product that you experience is no different from what you would see anywhere in Manhattan. So I think that's a very, very important factor, right? Our cost of development in India, our cost of construction is $60 to $70 per square foot, whereas anywhere else in the world, it's $500 to $700 per square foot. So these are parameters that give us a lot of optimism to say, invest in India, and as a second choice, invest back in India. So I think that would be my submission.
Thank you. Thank you very much, Manoj.
Regarding what was mentioned about a shift of America focusing on manufacturing and capability centers moving potentially to India, is that at a nascent stage or aggressive? And could that also lead to generating demand in beyond the 8-10 clusters in India, wherein most of the development is concentrated? Or you feel there may be sufficient demand to spread into the outskirts of cities there as well? Thank you.
To
whom? Maybe Ben or Manoj, either. Yeah.
I could take that. Thank you. I think, as I mentioned earlier, there are 1,600 global capability centers in India today, and that's only growing. So a great part of India's demand comes from the global capability centers. And there is today, if you look at, there are about 6 primary markets that absorb space in India today, and of which maybe 3 of them in a city which is in the south, city called Bangalore, city called Hyderabad, and Chennai take a lion's share. So more than 3/4 of the absorption is within 3 cities of these 6 gateway cities. But having said that, we have another 10 cities that are slowly beginning to see absorption coming. And the trend in this is to do with availability of human capital, right? So the more number of engineers that are made available in each of these cities, and depending on how many educational institutions there are in those cities, and if there's availability of manpower, I think that would then fuel the availability of real estate. So you must keep in mind, manpower costs are, as a part of operating costs, is about 10%, and real estate cost is about 10% for these global capability centers. So I think for the other cities to benefit beyond the gateway cities, it will be availability of human capital that will play a very key role. I don't know if that answers your question.
I want to take the opportunity to look forward as well, to try to switch on our crystal ball here. And I want to talk about future of real estate for a moment before we end this session. And Manoj, I know you have been participating in different work groups about that, but it's true that the way we work, the way we play, we live, the way we consume, the amount of technology, artificial intelligence, a lot of things are changing. And sometimes I get the feeling that real estate is a very traditional industry, and we are so observed by our, all metrics that we forget that society is changing, the technology is changing, the way we do a lot of things as well, and that will necessarily impact real estate. So I would like to ask the 3 of you, how does the future of the real estate industry look like? What's the future? What's the future hold? It's a very easy question, of course, Manoj and Ben and Richard, but of course we don't have the exact answer, but can you give us any clue about what's your views on the future of real estate?
Gustavo, I could go first. Again, I look at it from India's perspective as to where we see the future of real estate in India. And I think the few lessons we've had from China, where China's real estate debt is bigger than the Indian economy, is to stay easy on leverage, right? And I think the financial systems in India regulate the amount of leverage you can take. And I think one of their aspects that most real estate developers in India have now kept in mind is work on a very low leverage environment. So I think that's the first. The second is, I think one of the comments of the questions from the audience, which Ben very well articulated on mixed-use developments. We think the future is all about mixed use, right? And I think the more developments like Manhattan West and Hudson Yards that you're going to see coming up, and I think if you see those today, I think that's really going to be the future. So the ability to fold in the social fabric of the city into your developments. And what do you mean is social fabric? It could be retail, it could be hospitality, or it could be other creative uses that you put into your developments. I think creating that differentiator in a product is going to be very, very important, because in order to bring people back to work, or to bring to people to pay those high capital values, I think we have to be creative in the way we bring them all back, right? How do you increase collaboration? How do you build inclusive communities? And how do you bring in sustainability into inclusiveness? So these are aspects that we think will redefine the future of real estate in India. Thank you.